So may I request Mr. Kazuya-san to kindly lead as we invite the other speakers of this session on Japan, South Korea, and Australia. The speakers would be joining are Mr. Bruce Ikemizu, who is the Representative Director, JBMA, Japan Bullion Market Association, Mr. Cameron Alexander, who is the General Manager, Commercial Development Department, and Mr. Jung, Managing Director, Jung International Private Limited.
Welcome to our session on the precious metals in the economies of Japan, Korea, and Australia. These three nations, each with their unique strength and strategic initiatives, are pivotal players in the global precious metals market. With their deep cultural legacies and advanced technologies, Japan and Korea lead in innovative applications and recycling and fabrications of precious metals. Meanwhile, Australia stands as the cornerstone of supply, rich in natural resources and home to some of the world's largest mines. Our discussions today will delve into the complexity of the precious metals market, examining the supply chains, sustainability practices, and future investment trends. Thank you for joining us today, and thanks to ChatGTP for writing my speech today. Joking aside, we have a great panel of speakers today. First, we have Mr. Bruce Ikemizu, who is the Representative Director of JBMA, Japan Bullion Market Association. Yeah. He started his career with Sumitomo Corp as a gold trader in 1987, I believe. He then spent time with Credit Suisse and Mitsui. Bruce also headed the ICBC Standard Bank in Tokyo branch, where Bruce actually hired me, so thank you for that, Bruce. Next, we have Mr. Jung, who is Managing Director of Jinsan International in Singapore. Sean has spent most of his 30 years of metals and mining career with Samsung C&T in Korea, UK, and Mongolia. Korea is now everyone's focus from K-pop to K-drama. I'm sure Sean will give us a great insight into gold K-bars. And this is the first time that we are addressing the Korean market at APPMC. We are all excited to have you here, Sean. Finally, we have Mr. Cameron Alexander, who is General Manager of the Commercial Development Team at the Perth Mint. As many of you are aware, Cameron has more than 25 years of experience working in the precious metals industry. Prior to joining Gold Corporation, he held the position of Director of Precious Metals Research at the Refinitiv. And welcome back to APPMC, Cameron. As we do not have too much time, spare time here, so we'll go right in, and we'll start with Mr. Bruce Ikemizu. Thank you.
Okay, I just want to speak about the changes I see in the Japanese gold market. Well, as you probably know, that gold in yen, best performing instrument in whole financial assets this year so far. I think we had we are like 25% up from the start of the year. So gold in yen is going higher because the dollar, dollar-denominated gold is going higher. And also, the important point for us is like Japanese yen is getting weaker and weaker. And that changes Japanese investment mind a lot. Because with these higher gold prices, I was impressed by Thailand information this morning that people are buying with these highest prices. It's the same thing in Japan. Well, we used to be like when the gold in yen hit 5,000 yen first time, or 6,000 yen, 8,000 yen, we saw a huge selling of investors who are taking profit. But now at 12,000 yen per gram, we are seeing both selling, of course, but more buying at that historical high level. This never happened in the past. And so the mind of investors are changing a bit. And also I noticed that before COVID, when I do a gold seminar, there are audiences. Most of the audiences are very old people. Old gentlemen, old ladies. But now, after COVID, I see very young faces, especially young ladies came to me, listening to gold. So it's a very big change. Probably all people already gone, but people are worried about yen this weaker, getting weaker and weaker. So they are worried about their wealth, because our wealth basically 100% yen, yen denominated thing. So people, in the past 30 years, it was okay to do nothing because we are in a deflation economy. But now it turned 108%. Now we are in inflation, and especially in yen, our yen purchasing power is getting less and less day by day. So now we see a very good buying interest, and supply and demand. Demand is quite strong even with these prices. Now let's just turn over to this is the reference from the UBS. Thank you very much. You can see, well, this chart that even with the price going higher, the demand is bigger than the selling. This is very peculiar. This recent years, and also ETF. I write articles for Mitsubishi Trust Banking, who are doing the Japanese biggest gold ETF, and that ETF's balance is getting bigger and bigger, while the other Western nations in total getting smaller and smaller with the profit-taking selling. But Japan is different. And also, let's look at the supply side. Maybe this is related supply side, but this is Japanese import and export figures of the gold. We have long been an export country of gold, while we only produce like 6 tons from Kagoshima Hishikari mining. But we are like almost nearly 100, depending on the year, but nearly 100 tons of export we have for the other countries like Southeast Asia. And I thought, when I was a trader, I thought because people bought a lot of gold, like in 80s, 90s, and they are taking profit as gold prices going higher and higher and higher. But actually, it was because of the smuggling of gold from Hong Kong, Korea, those Asian countries mainly, because of the consumption tax that you get. Now you get 10% over your selling price as a consumption tax when you sell. When you buy, you have to pay, but when you sell, you get it back. So if you buy the gold from, let's say, Hong Kong without any tax, and smuggle it into Japan and sell it in Japanese jewelry shop, then you can get 10% automatically on the price. So that is basically a very simple explanation of the smuggling and the gain for the export of the Japanese gold to the other countries. So, this is Mitsubishi's ETF's balance. As you can see, this blue part is gold. It's just going up, and recently it is going very rapidly increasing. And red part is platinum ETF. Unfortunately, platinum has not really got good interest as gold, but I hope platinum would be the next one that Japanese would invest. Okay, this is my short presentation.
So I'm Sean from Korea. Oh yeah, okay, so I'm from Korea, so plastic surgery is very famous. So maybe 10 minutes, I have changed it like that. So just Kazi explained about Korea. Korea is a well-known has K culture, K-pops, and K-dramas. But it would be much more amusing and entertaining if I sing and dance today, but sorry, I can't. I'm here to let you know that how the Korean market is. Especially Korea has also a very strong demand and a very stable demand. As Korea is pretty much manufacturing-based countries, also there is a huge preference for gold. Okay, so today I can't just give you just a very detailed explanation. I think that this is the first time the Korean market is introduced to the external world. So especially in international conference like this. So I will be the first person to explain the Korean market. In this sense, I'm pretty much honored, and thank you for giving me this opportunity, Kaz. Okay, so let's take just a quick snapshot of Korean market first. I want to talk about supply and demand update for precious metals market in Korea. So Korea, the supply demand for gold. I have got this data. This is about the last 4 years of import and export data. It looks like that export quantity is bigger than import, but Korea is a net import country. But that export has been just driven mainly by gold price surge in recent years, and especially the very sharp fall in just a Korean won, just a currency value. So that's why from time to time, gold is being exported from Korea on a mass scale. But that gold export doesn't occur regularly. It's very inconsistently and very opportunistically. Probably some refineries and traders from Hong Kong might have this kind of situation in Korea. I mean, they're very familiar with this situation in Korea. Actually, the total demand for gold in Korea, it is estimated to be around 100 metric ton. Out of that, 75% would be about jewelry sector, and the remaining 25% demand comes from the industrial application, because Korea has a very strong manufacturing background, such as Samsung Electronics and LG and all other IT industries. So the balance, actually, there is a supply by the local producers and recycling. Korea also has two major smelters. Those are the big name companies you might be well aware of. So they're producing 50 tons of gold and around 4,000 tons of silver. For taxation, Korea doesn't have any GST when gold is imported, but there is a 3% of import duty. There was, a number of issues about taxations. Now, the taxation-wise is much clearer and transparent, but there are also, very dodgy points as well. That's one of the reasons the investing market doesn't grow that much. So I will tell you a bit more about that later. This is the data for silver. On the contrary, the silver, Korea is producing huge surplus of quantity. So the domestic demand is around 500 metric ton. Not like gold, the silver is not that much consumed in industrial applications. So mainly for the, silver is not consumed a lot in the jewelry sectors, mostly just used for the industrial applications. So that's why, a huge amount of silver is being exported out of Korea. The export quantity is around 3,300 tons yearly. The exported silver, basically, they are coming from the smelters, highly refined, and also, directly applicable to the industrial purpose. I believe, most of the silver is being coming into Japan for solar industry, and some quantity is going to some other markets. One noticeable thing these days in Korea, there are a couple of proper-sized and very professional recyclers in Korea, very active in recycling silver, especially from petrochemical industry. Under the environment requirement, especially with the ESG policy, so there are, demand growing from industrial applications, looking for the green metals and, less carbon footprint, material. So two recyclers are very active, and also they are just exporting all those refined silver out of Korea these days. That's one of the unique things which is taking place these days. I started my career as a bullion trader around 30 years ago. And although I'm a bit away from the market for some years, but I exactly remember what had happened since I just officially take up this bullion dealer's role. And Korea doesn't have a long history, but there are a number of issues, even in such a short of time. I remember 1988, that's when exactly the gold started to be imported officially into Korea. Before 1988, wow, lots of gold was smuggled, especially from Hong Kong. So people would say that, gold price sometimes soars, especially when there's high sea waves from Hong Kong. So, the gold couldn't be transported because of, the bad weather. So that's when, gold price soared in the domestic market at that time. And also in Korea, there is a very unique, strong preference for gold. For example, when your kid is a 1-year-old birthday date, basically all relatives and friends get together for the birthday, and they just donate and give, 1 rings. 1 rings, size-wise, is almost 0.1 ounce. So depending on, size of the family, one little 1-year-old boy or girl could receive 3 to 10 ounces of gold. So now 10 ounces is 20,000. So it was like that. So, the minimum size of gold is 0.1 ounce. But now these days, gold price is too high. People feel a bit of emotional reluctant to, donate the 0.1 ounce. So that gold, size, getting smaller, but still, every individual, the little 1-year-old boy and girl that can receive the, the gold rings for their birthday. So which is a huge demand in Korea. And also, Korea has a Samsung Electronics and LGs, and a number of oil refineries, petrochemical industries, that consume a huge amount of the precious metals, gold, silver, and PGMs. So there was a brief idea, and then there was, a kind of short story during the late 1980s. From the 1990s, so I started my career just from the 1995. At that time, huge amount of gold, was imported into Korea, regardless of actual demand. Why? Gold, officially start to be imported into Korea as far as you pay for, tax. Then Korean trading houses, so, like, Japanese Soga Shosha, Korean Soga Shosha, import a huge amount of gold to use gold as a financing vehicle. At that time, Korean interest rate was 13%, and at that LIBOR rate was 6.6%, something like that. So, there was not much of fluctuation between the two currencies. So Korean trading houses, the lease the gold and sell it back to get the cash and use that cash for their businesses. Huge amount of gold was financed at that time. But suddenly, 1998, Korea encountered the IMF crisis, financial crisis. So, everybody was forced to donate the gold, or just take the gold out of there, drawers, whatever. Then, in order to just get the US currency, we had to sell the gold. So it was, the national gold campaign. Again, Korea exported huge amount of quantity. So all the gold at that time was shipped to the Zurich, Switzerland, Then 1 year after, the U.S. cash came into Korea. That's how it worked. Even that gold exports was driven a lot by the Korean currency. In 3 months, when the Korean economy was hit by the IMF crisis, the currency value, $800 per one US, suddenly 1,600 won per US. The value-wise is devalued, just 50%. So it was a big driver for the just gold export at that time. After 1990, early 2000, the Korean economy just settled back in. So it had stabilized. Then gold market also became stable, so comparatively so in much a better way than before. But still, the GST had been a big issue. So the government decided to remove the GST from the gold. GST was 10%. So 10% with GST, you can't trade the gold freely at all. The government removed the GST, but it was that decision was made in such a short of time. There are number of actually it was not properly and made in a sophisticated manner. So that's why a number of doji players traded gold. Then as a result, a number of distorted transactions. Again, related to just these distorted gold transactions, that issue produced array of the convictions. So, okay, so he's pushing me. I will just make it quick and short there. Okay, so the GST issues was a big issue, but after that, the government decided to revamp it. And but still, after revamping, but the policy was not that sophisticated. Still, we have some issues. Comparatively transparent and clear, but we're still having that issues. But how to resolve it? Well, the government is still working on it. So 2020s, what currently, so we still have a very strong demand for the IT industry. But the consumption-wise is smaller because less good consumption in electronic parts. But overall size-wise, it's still growing, and people are getting more and more aware of the just gold investing, as gold price is still very strong, and also Korean won even the last 2 years steadily been weakening. So, but as I mentioned, the Korean there's still GST issues. You can't just take the physical gold, but you have to pay for the 10. But if you just resell, there is no the GST, the refund. That's just a serious drawback. So lastly, the Korean is more and more aware of the green markets, green metals. So IT industry basic, Korea just producing also lots of scraps and for recovery. Then I think this trend will be more highlighted in the future. Okay, thank you so much.
Thank you very much for the opportunity to be here today, and thank you to the organisers for the opportunity to be here. Thanks, Kaz, for the invite. We've already heard from Jordan this afternoon in the detail of the Australian market on the investment side. So today I really want to just concentrate on the fundamentals of the Australian market and give you some sort of give you a bit of an understanding of the size of the market compared to the global size of the market, and also where the market stands in terms of jewellery and investment, in terms of size compared to other markets in the region. And really wanted to concentrate today on the supply side. I mean, people know Australia is a significant supplier to the global market. I think 2013, at 294 tonnes of gold produced, that takes around about 8% of the global supply. So it's quite significant when you compare that to other markets. Look at the last couple of years. You look at 2023, we've seen a 4% decline. That's almost a 10% dip from the high that we saw in 2020. So that might suggest that the market is cooling somewhat in terms of supply, but that's not really necessarily the case. We expect to see that the supply over the next couple of years to remain relatively steady. We've had some serious weather implications last year that sort of slowed down some of the supply coming into the refineries. Australia has really been oscillating between the second and third largest producer globally over a number of years, and based on the metals focus numbers, Australia looks to sit at number 3 in 2023, behind China and Russia, with China leading the pack well above Russia and Australia. Gold sales from Australia last year were at an all-time high of over $20 billion on the back of the highest gold prices ever recorded, with the industry taking back its position from lithium, and this is in Western Australia, as the state's second most valuable mineral after iron ore. The production pipeline remains relatively strong. We expect to see that the very strong high cash margins that our gold producers are experiencing at the moment will play out to newer mines coming on stream over the next few years. And what we have seen at the recent high prices is that we have seen a significant uplift in exploration in the gold sector. Last year, the exploration budgets were up nearly 8% compared to the year before. And what this has done is brought on older mines that were mothballed or put into care and maintenance. And we've seen a lot of these smaller mines come on stream over the last 2 to 12 months. And we expect to see the same over the next 2 to 12 to 18 months, where some of these smaller mines come on stream. One of the major issues for the Australian gold market in terms of supply has been a lack of significant big finds. And there hasn't really been any multi-million ounce deposits found for some time, other than one, the Hemi deposit up in the Pilbara of Western Australia, which is due to come online in a couple of years' time. But other than that, it's been a fairly lean period for the market. So when we compare the Australian demand side of the equation to our neighbours in the north, the Australian market on the demand side could be considered a little bit underwhelming. While the Perth Mint is a significant contributor to the global gold market, turning over nearly $23 billion last year, most of the demand is outside Australia. The jewellery market, again, when we compare it to more price-sensitive markets across Asia, is rather modest, to be fair. According to Metals Focus data, annual jewellery consumption last year was close to 12 tonnes, while investment demand, a combination of bar and coin demand, sat at just over 13 tonnes. So, and that's down from a peak of nearly 25 tonnes in 2022. So when you compare that to some of our Asian neighbours, it certainly is a lot lower than what you might enjoy. The slide on the right-hand side here shows the Perth Mint sales in recent years, and clearly demonstrates the impact of a rising price has had on offtake. Recycling volumes have certainly picked up, and we've seen an increase in disinvestment as consumers take profits out of selling their gold. While demand is seen as declining in recent years, it's worth considering that we are coming off a 3-year record high, and the levels that we are seeing at the moment is more in line with what we saw pre-COVID. This is more of a normal market situation rather than a significant correction in our view. In Australian dollar terms, not unlike US dollar terms, the price impact has been considerable. And we've seen the precious metal price, up until last Friday at least, jump more than 17% since the start of the year, sitting at over $3,550 an ounce in Aussie terms, which provides a very healthy cash margin for our gold producers sitting across the country. But does make it very expensive for our mum and dad investors to buy gold coins or medallions, or to buy as a cast bar. Australia is no different from any other major markets in this part of the world. We are seeing significant rise in cost of living pressures, and that's also playing out, in our view, in some of these investments in the jewellery market. We've seen interest rates hitting a 12-year high in Australia, and that is also having a significant impact on what can be spent week to week. Also wanted to quickly touch on just a few issues in the Australian market, one being the tax market. Australia does have a GST, like a lot of our Asian neighbours. It's a 10% GST applied to most items in Australia. This happened back in 2000, when a goods and services tax was actually first introduced. And that's really most items excluding food and a few other items. Now, gold is one of those items that is excluded when it's the first purchase of investment grade gold after refining is GST free. Thereafter, it does actually attract the 10% GST, as does jewellery across the board. But there are some important definitions I would like to make there, that gold must be at least 99.5% purity as an investment grade, and silver must be 99.9% pure to be that GST-free status. If it's below those levels, then the GST of 10% is applied. And jewellery likewise attracts the GST across the board, and imported jewellery attracts an additional 5% duty as well as the GST. We've been asked to just identify a couple of perhaps opportunities within Australia, and we're really sort of focused on the jewellery side, where we think that the market is expanding. We have seen obviously price pressures, which are seeing some declines in some key markets, and generally in the Western style markets, I would say we are seeing some declines. But one of the items that we really have identified is that we think there's a chance for more imported jewellery into the Australian market. When Australia relies heavily on imported jewellery to boost up our consumption volumes, the Australian fabrication is relatively modest compared to other markets. What we sort of pointed out here is that we believe that we can see more demand from expatriates demand, so certainly through Asia. So we've seen a lot of Indian sort of retail outlets looking at Australia as a way of promoting 22-carat jewellery, for example, or indeed 24-carat for Chinese branded product as well. And a lot of these big branded retailers that we've seen across the Middle East and India and indeed China are now starting to pop up within Australia as they try to tap into that expatriate market. And that's one area we believe we could see, certainly for our audience today, there's certainly a chance there that demand is expanding over the next few years. I think the expatriate market often will travel overseas to buy their jewellery, and there's an opportunity that they may well buy it in country if the opportunity exists. I can see that we're actually down to the last minute, so I think I'll leave it there, but thank you very much for your attention today. Thank you.
Just one question to maybe each individual panelist. You all touched upon the import and export statistics of your respective countries. Which countries are the primary destination and source of physical precious metals? And how have the trends of destinations or sources evolved over past decades? So, Cameron, you want to?
Yeah, and so from a wholesale point of view and from the Perth Mint's point of view, probably over nearly 70% of the gold that we refine is destined for China. That's via Hong Kong or directly into Shanghai. So it plays a very important role in what we do in Australia. Historically, India was the largest market for Australian gold, but that has certainly changed over the last decade, and China now is certainly the priority in terms of the main flows. Apart from China, it really is sort of Southeast Asian market plays a big part, and when the market is very poor, then we are forced to send gold into London. So that's really our last resort, but it often is around sort of 7 to 8% of annual exports is to the UK. Yeah.
Okay, thanks, Cameron. Sean, you have any comment on the import-export trends or anything? No?
Well, that now gold price is soaring and Korean, currency is weakening a lot. But in terms of investing, there should be a, much bigger risk. Investing appetite from Korea. But the one drawback, as I mentioned, is a taxation thing. Although I said that government service tax has been removed, but there is some kind of a deposit account policy. So you have to put some certain amount of GST tax for a certain period. Although you will get it back in a short time. Again, it's also financing burden. Now, government is well aware. So government is trying to work something out from the current taxation. Probably when these things will be is properly sorted out, there will be really big, just investing demand from Korea, I think.
Okay, from Japan as an exporting country, I think the biggest destination is Southeast Asia, probably through Singapore and Hong Kong, and probably some to China through Hong Kong. Yes, and when there's no good demand in those areas, we ship it to London directly.
Okay, thank you. Maybe one last question from the audience. What are the major challenges Australia, South Korea, and Japan face when expanding into Southeast Asia?
For us, it's very much about responsible sourcing. So we have to make sure if we're moving into a market, we're very comfortable with who we're selling to. And if we're receiving gold the other way, we have to make sure that we're very comfortable of where that metal has been sourced. So that's one thing that has changed. I think from an ESG point of view, it's actually having full knowledge of the supply chain coming in and out of the country is vital to what we do going forward.
Well, I think this SBMA conference has given to Japanese that to know the market, because Southeast Asia looks near, looks closer, but not really. I mean, pretty much far away from Japanese point of view. But coming to this conference for years, and we now know who are doing what. So I think this, well, I don't know, maybe this is not answer to this question, but this is very good opportunity for Japanese companies to know, to have the connection with Southeast Asia gold players.
Well, Korea is actually a net importing country for gold, so there are not much of, what you call activities, Korean players, trying to expand to other countries. But in terms of silver, Korea is exporting huge amount of silver. But even for silver, most of the silver is pretty much dedicated to some specific region, for example, to Japan. But as I mentioned, now, a couple of recyclers is very active in Korea for silver. So they trying to export those silver, if possible, to end-user countries instead of being, refined again for the stamp for some, stamp recognition. So I think in that sense, Korean, what you call the recyclers' brand awareness is more than important, I think. But that's one of my roles as well, because I'm just promoting their silver for the overseas market at the moment.
Thank you. Yeah, from my perspective, sitting in Singapore, I think what we feel is that maybe more branding may be required from maybe not so much from Australia. You guys are already here, but maybe Japanese brands and Korean brands. We need to make sure that the Singapore or the Southeast Asia consumers understand the quality, because oftentimes maybe Swiss bars are more regarded as a more premium. So perhaps other parts of the world will need to do a bit of work. Okay, thank you. Okay, ladies and gentlemen, as we conclude our session on Japan, Korea, and Australia, I would like to extend my heartfelt thanks to all of you for participation. I hope this session has provided you with the valuable insights and sparked your interest in these markets. Thanks again for participating, and enjoy the rest of the APPMC. Thank you.
That was an interesting session for the first time on Japan, Korea, and Australia.